Alright, guys, we begin with a quick revision of all the ratios which are there in our US CMA Part 2 syllabus under Unit number 1 Financial Statements Analysis. This video can be used by students studying for CA inter examination for their part 2 or group 2 financial management subject. This can be used by CS executive students who are studying financial management as one of the subjects in their new syllabus. A very important discussion now, conceptual, helping us to understand everything with respect to financial ratios, financial statements, etc. Now, first of all, understand one thing, that your financial statements per se comprise of the following statements per se. The first statement is your trading cum P&L statement. The second is your balance sheet. The third is your cash flow statement. Ratios enable us to understand these financial statements in a better manner. Ratios essentially establish a relationship between the various line items, that is, the various reported data points of each of these financial statements, to help us to interpret and analyze the financial statements of a company. Second, enable their comparison with other companies within the same industry, and also enable a company to compare its performance of the present period with that of the various past periods. Ratios enable the management of an organization, specifically the board of directors, to take certain strategic decisions with respect to how they want to see the company flowing, operating, raising the finances over the next few periods or the next immediate current period. When we talk about ratios, we begin by talking about liquidity ratios. Liquidity is the ability to pay off your immediate expenses. Please understand that immediate expenses that are payable have to be paid out of revenue only. Have to be paid out of revenue only. Meaning out of the current sale, out of the current income of the company. Why, you may ask this question? Friends, it does not make sense. Friends, it does not make sense that you have to sell your long-term assets to meet your short-term expenses. It is as good as saying that you are selling your car to pay your electricity bill at home. Is that a logical statement? No. You are selling your car to pay the property taxes of your residential premises. Does that make sense? No. You are selling your personal assets like your shares or your gold or your mobile to pay the person who is helping you to manage your household, like a domestic help or a cook who you have employed. Does that make sense? No. It does not make sense. You are going to have these expenses such as electricity, such as having a domestic help, such as payment of property taxes, such as water bill, such as payment of certain entertainment expenses for the family, out of the income that you earn yourself. Same goes for the company. So the company has to meet its payables out of its income. Now, this statement needs more clarification. Payable can be short term and payable can be long term. Please understand this. Here I am talking only about short term payables. What is the difference between both? Please understand, in the capital structure of a company, funds can be raised by four sources. What are four sources? The first source of raising money is your own money, which is known as equity share capital. The second is debt. The third is using your own profits to be reinvested into business, which is nothing but reserves and surplus. So this money is not necessarily raised. It is not raised, it is earned. And the fourth source is preference share capital, which is in substance a kind of a debt only. Because preference में क्या होता है, you have to pay the preference dividend and you have to redeem the face value of the preference share that you have raised from the market. Essentially, the study of financial management takes us across these two sources, equity and debt, and the balance that they have to strike with each other. This is the entire study of financial management. Debt is a long term source, therefore, it is not payable immediately. It is payable across a period of time. It is payable across a period of time. But when you are carrying on your business, you are making certain purchases for operations. What are you doing? You are making certain purchases for operations. What is the difference between those purchases for operations and this debt? First of all, understand that. Let us say that I am Behrouz Biryani. It is my product to sell the biryani that I make. Therefore, I need to buy rice from somewhere. That rice is not the same as taking a 10-year bank loan from ICICI Bank. A 10-year bank loan that I take from ICICI Bank is going to fund my business for a long term period. However, the credit, that is the udhari, which is given to me by the supplier of rice, is not for a 10-year period, it's for a period of a few weeks or probably for a few months. So please understand, all operational payables are generally short term. What are they? They are generally short term. So what payables am I talking about? I am talking about operational payables. What payables am I talking about? Operational payables. Payables matlab your outstanding expenses that you have to pay. They can be, for example, payments to creditors of goods, that is. These are called in terms of financial management as accounts payable. What are they called as? They are called as accounts payable. They can be bills payable, that is when a bill of exchange is drawn by a creditor upon you. They can be outstanding expenses per se. These all amounts have to be paid by the revenue of the business. My dear friends, the revenue of the business will generate, or rather, revenue of the business means sales of the business. Always remember, sales creates two current assets for the business. The first question you may ask is, what is the meaning of the term current asset? A current asset is an asset that is converted to cash within 12 months period of time. Within 12 months period of time. Do I make myself very clear in this statement? A current asset is that asset that is converted to cash within a 12 months period of time. Do I make myself amply clear over here? Yes. Therefore, please understand, when I talk about sales, sales are of two types. That is, they can be cash sale or they can be credit sale. Cash sale, you just pass the basic journal entry debit what comes in cash account debit to sale. And for credit sale, you pass the journal entry accounts receivable account debit to sales. Am I clear about this? Yes or no? Please tell me that. Friends, accounts receivable is nothing but debtors. So accounts receivable and cash are both assets that can be converted to cash within a 12 months period of time. Somebody will say, sir, how do you convert cash to cash? Friends, cash is already in the form of cash. So accounts receivables are generally converted to cash within a 12 months period of time. That is why they are called as current assets. That is why they are called as what? Current assets. When we look at the balance sheet of an organization, we look at assets being of two types. Assets are short term and assets are long term. Short term assets are called as current assets and long term assets are called as non current assets. Non current assets are also converted to cash, but they take a period more than 12 months, whereas current assets take a period which is less than 12 months. Please understand this. So current assets can be converted within a period less than 12 months and non-current assets for a period more than 12 months. Please understand this particular concept. Current assets per se, current assets per se are classified in two categories. That is quick assets and non-quick assets. What that is, I will talk about that shortly. First of all, let us make a laundry list of certain current assets that you are going to face in the journey of doing ratio analysis. First of all, cash. Second, bank balance. This is your cash per se. Next is short term investments. What is the next one? Short term investments. Next is marketable securities. Next, accounts receivable. Next, bills receivable. These are classic examples of amounts that will be converted to cash over the next 12 months. One important current asset that we hold is known as inventory or stock. Inventory are the goods that we purchase or we manufacture for the purposes of resale. The problem with inventory is I cannot guarantee you that inventory will be converted to cash within the next 12 months. Have you ever noticed outlets of brands like Puma, Adidas, Nike, or probably any other clothing brand? They always have this kind of a announcement outside their showroom once every 6 to 7 months. 80% discount stock clearance sale. What is the meaning of that? These are those goods that they have not been able to sell so far, but they need to sell them. So they are giving you a hefty discount so that you will go and buy the goods ताकि उनका सेल्स हो सके वे और गुड्स उनके हाथ से कोई ले जावे. इन्वेंट्री की कोई गारंटी नहीं होती कि वो इतने इतने दिनों में बिक जाएगा. इट्स योर टैलेंट एज अ सेल्स फोर्स कि आप कितने टाइम में इन्वेंट्री को बेच सकते हो. सो प्लीज अंडरस्टैंड, इन्वेंट्री को 12 महीने में बेचना, इन्वेंट्री को 12 मंथ्स में बेचना is the objective of the business, but the business cannot guarantee that within 12 months the inventory is going to be sold. So while inventory is a current asset with the intention of converting it into cash within 12 months, it may or may not get converted. But all of these guys here in the red box certainly are converted to cash within how many months? Within 12 months. That is why they are known as quick assets. What are they known as? Quick assets. But there are two items of current assets. First is inventory and the next is prepaid expenses. What are prepaid expenses? अगले पीरियड का खर्चा ये पीरियड में दे दिया तो उसका लाभ आप अगले पीरियड में उठाते हो. Prepaid expenses may not necessarily be extending just to a 12-month horizon. Now, prepaid and inventory are considered to be those items that will take more than 12 months to be converted. Now, please understand in this also, prepaid expenses are never converted to cash. What you get out of prepaid expenses is only a benefit. What do you get out of them? Only a benefit. They are not necessarily converted to cash. Rather, they are not converted to cash. But inventory, there is no guarantee that they are going to be converted to cash. These two boys put together comprise a team known as NQA, non-quick assets. So who are non-quick assets? Non-quick assets are current assets, but they are such that you cannot guarantee that they will be converted to cash within 12 months. But they are your current assets. Your quick assets and your non-quick assets put together become your current assets. Become your what? Become your current assets. Please understand this statement very, very clearly. Current assets. Please understand this statement very, very clearly. Current assets are to be used to repay the current liabilities. To repay what? The current liabilities. Current assets are converted to cash, and that cash is used to pay current liabilities. Is used to pay current liabilities. Sir, what are current liabilities, you may ask? प्लीज फोकस ऑन द स्टेटमेंट. माय डियर फ्रेंड्स, लायबिलिटी का मतलब होता है एनीथिंग दैट इज पेएबल बाय यू और डिलीवरेबल बाय यू. If the liability is to be paid within 12 months, is to be paid within 12 months, it is a current liability. But if the liability is to be paid beyond 12 months, is to be paid beyond 12 months, it becomes a non-current liability. Sir, let us understand this concept a little more deeper. Let us say that I have a 10-year, I have a what? I have a 10-year debenture. We'll take it as a 3-year debenture. It will be good enough to uh, convey the message. Not 10, we'll have to discuss it for a longer time. Let us say that I have a 3-year 10% debenture. The value of the debenture is rupees 1 lakhs. So my dear friends, at year 1 end, I will pay 10,000 rupees as interest. At year 2 end, I will pay 10,000 rupees as interest. And at year 3 end, I will pay 10,000 rupees as interest. At year 3 end, I will repay principal 1 lakh. Now focus on this. My dear friends, financial statements will be made for each year. ईयर वन के एंड में ईयर वन के एंड में हम लोग 10,000 रुपया पे कर चुके हैं. ये खत्म हो चुका है, ये दे चुके हैं. प्लीज अंडरस्टैंड दिस स्टेटमेंट. वी हैव पेड फॉर इट. पे कर चुके हैं, पैसा दे चुके हैं. वी हैव पेड फॉर इट. दोस्तों, ईयर वन के एंड से 12 महीना गिनो, आपका ईयर टू का एंड आता है. अग्रीड और डिसअग्रीड? देयरफॉर ईयर टू का जो इंटरेस्ट है वो ईयर वन के लिए करंट लायबिलिटी बन जाता है. बट फ्रेंड्स, ईयर थ्री का भी तो इंटरेस्ट पेएबल है ना. ईयर थ्री का भी तो इंटरेस्ट पेएबल है. लेकिन ईयर थ्री ईयर वन के एंड से मोर देन 12 मंथ्स के लिए है. तो ईयर थ्री का इंटरेस्ट ईयर वन के लिए नॉन करंट लायबिलिटी बनता है और ईयर थ्री का प्रिंसिपल ईयर वन के लिए नॉन करंट लायबिलिटी बनता है. ईयर टू के एंड में ईयर टू के एंड में ईयर थ्री का इंटरेस्ट और प्रिंसिपल ये दोनों करंट लायबिलिटीज बन जाते हैं. क्योंकि ईयर थ्री का एंड ईयर टू के एंड से लेके ईयर थ्री के एंड में बीच में कितने महीने? 12 मंथ्स. फॉर एग्जाम्पल आई एम टॉकिंग अबाउट 31st of December 2008. लेट अस से ये ईयर टू का एंड. तो 31st of December 2009 को आप क्या करोगे? आप प्रिंसिपल भी दोगे और इंटरेस्ट भी दोगे. इन दोनों में फासला कितना है? 12 मंथ्स का है. देयरफॉर ऑब्वियसली ईयर टू के एंड में ईयर थ्री का इंटरेस्ट और ईयर थ्री का प्रिंसिपल हैज टू बी पेड विद इन 12 मंथ्स. देयरफॉर ईयर थ्री का प्रिंसिपल आउटस्टैंडिंग और ईयर थ्री का इंटरेस्ट ईयर टू के लिए करंट लायबिलिटी है, नॉन करंट नहीं. पर ईयर वन के लिए ईयर थ्री का इंटरेस्ट और प्रिंसिपल क्या है? नॉन करंट लायबिलिटी. आर यू अंडरस्टैंडिंग व्हाट आई एम ट्राइंग टू से? यस और नो? फ्रेंड्स, एक सिंपल सा सवाल धंधा आपसे पूछता है या इन्वेस्टर आपसे पूछता है कि डू यू हैव इनफ कैश टू पे योर करंट लायबिलिटीज. अभी इस सवाल को अनेक तरीकों से आंसर किया जाता है. पहला सवाल यह है कि डू आई हैव इनफ करंट एसेट्स टू पे ऑफ माय करंट लायबिलिटीज. मीनिंग, अगर मेरे पास 1 रुपए की करंट लायबिलिटी है, मेरा सवाल यह है कि अगर मेरे पास 1 रुपए की करंट लायबिलिटी है और मेरे पास अगर 3 रुपए के करंट एसेट्स है, तो क्या मेरे पास इनफ पैसा है क्या करंट लायबिलिटीज पे ऑफ करने के लिए? है. So can I say that my current assets are 3 times of current liabilities? Yes. दोस्तों, I am expressing a ratio between them. Ratio generally involves us dividing one by the other. So if I divide current assets by current liabilities, I come to know कि for each rupee one or each dollar one of current liabilities, how much current asset do I have? How much current assets do I have? So friends, if my ratio over here is number 1 greater than 1, I know that CA upon CL is greater than 1. Say for example, I take it as 1.8. I take it as how much? 1.8. It shows that I have 1.8 current assets and 1 current liabilities. Therefore, I can repay my current liabilities out of my current assets. I can repay and maintain a balance of current assets. सर करंट एसेट्स का बैलेंस मेंटेन करके आप क्या करोगे? वेयर विल यू गो? सर करंट एसेट्स का बैलेंस मेंटेन करके आई विल यूज दैट मनी फॉर द रेगुलर मैनेजमेंट ऑफ माय बिजनेस. सर व्हाट इज रेगुलर मैनेजमेंट ऑफ बिजनेस? स्टेशनरी चाहिए लेके आओ, चाय पीनी है ले आओ, इलेक्ट्रिसिटी का बिल भरना है भर दो, शॉर्ट टर्म सन्ड्री एक्सपेंसेस के लिए पैसे चाहिए दे दो, एक छोटा सा एसेट खरीदना है खरीद लो, एक आदमी को बोनस पेमेंट देना है दे दो, एक आदमी से ओवर टाइम का पेमेंट देना है दे दो. अगर आपके पास ये करने के लिए पैसे नहीं रहेंगे तो आप धंधा कैसे चलाएंगे? इफ यू कैन नॉट पे द एक्सपेंसेस ऑफ योर बिजनेस, कैन यू रन योर बिजनेस? So only paying off current liabilities is not enough. You should have money to do business left with you as well. Do you understand? Yes or no?
Yes.
The ratio can be equal to 1, where current assets upon current liabilities is equal to 1. That shows you that current assets is equal to current liabilities. चलो हमने बाहर के सारे पैसे तो दे दिए. You can repay in this case, but there is no balance. But there is no balance. This is desirable. This is okay. Now see the scenario that is bad. That current assets upon current liabilities are less than 1. Meaning, if current liabilities are 1, current assets are 0.8. आपको बाहर पैसा कितना देना है? 1 रुपया. आपके पास पैसा कितना है? 80 पैसा. Which shows that you have a shortfall of 0.2. What is this? This is a shortfall. This shortfall, obviously you will have to borrow and repay. What will you have to do? You will have to borrow and repay. The fact that you are borrowing and repaying shows that you have invited a cancer in your life known as interest. You have invited a cancer in your life known as interest. I personally don't like the idea of borrowing funds, but sometimes necessity is the mother of invention. You probably have to do it when you don't have any choice, when your back is against the wall and you have a gun to your head. Keep one thing in mind: the only way to deal with this is to increase your income. There is no other way out, because the interest burden has seeped into the bloodstream of the company. It's a germs, it's a virus. But please understand, interest is not bad. It's not a bad word. But interest not being able to be repaid is a bad word. Please understand that. आप डेट लो चुका दो, फंटास्टिक. आपके क्रेडिट रेटिंग्स हाई जाएंगे, आपकी मार्केट में स्टैंडिंग अच्छी बनेगी, आप में फाइनेंशियल डिसिप्लिन होगा, आपको एडिशनल कैपिटल मिलेगा. डेट लो और रीपे मत करो, लफड़ा हो गया. मार्केट में नाम खराब, लोग पीछे पड़ जाएंगे, सुकून से धंधा नहीं चला पाओगे. अब अंडरस्टैंडिंग व्हाट आई एम ट्राइंग टू से? यस और नो? My dear friends, what you have seen right now in front of your eyes is a ratio known as current ratio. What is current ratio? The ability to repay your current liabilities out of your current assets. What is current ratio? Current ratio is nothing but your current ratio is the ability. What is current ratio? Is the ability to repay current liabilities out of current assets. If you are taking down running notes like this is a lecture, ये सारी चीजें I would recommend that आप लिखे. अंतरा झोप येते का? Are you feeling sleepy? You want to go to the washroom and spray some water on your face and come back? Don't worry, you can do that. It's fine. अरे recording तो चलेगा. वो that is okay. You want to do that? Go. No, don't worry, but make sure that you are paying attention. What is the current ratio? बोलो. Current ratio is the ability to repay current liabilities out of current assets. Always current assets have to be greater than current liabilities. Always good. This is always good. Sir, good बोले तो how good? There has to be a rule of thumb. There is a rule of thumb that financial experts have given. That is, it has to be 2:1. Meaning, for each 1 rupee of current liability, you should have 2 rupees of current assets. You should have 2 rupees of current assets. What is the meaning of that? द मीनिंग ऑफ दैट इज दैट ये 1 रुपया चुकाने के बाद आपके पास फिर भी 1 रुपया बचता है आपकी दिनचर्या, दैट इज योर बिजनेस को मैनेज करने के लिए. आर यू अंडरस्टैंडिंग व्हाट आई एम ट्राइंग टू से? कि ये 1 रुपया चुकाने के बाद आपके पास फिर भी 1 रुपया बचता है आपकी दिनचर्या चलाने के लिए. दैट इज द मीनिंग of the current ratio. Do I make myself amply clear over here? Yes or no? My dear friends, please understand one thing. Current ratio is equal to current assets upon current liabilities. So if the denominator is to increase and the numerator is to stay unchanged, the ratio will fall. How? Let us say that the ratio is 4 upon 2. Now let us say that the denominator becomes 3 and this stays this much. So what happened to the ratio here? Here the ratio is 2 times, or here the ratio is 2. Here the ratio is 2 in this case. And in this case, what is the ratio? What is 4 divided by 3? 1.3. You can obviously notice a drop in the ratio. You can obviously notice a drop in the ratio. Do I make myself clear here? Yes or no? Please tell me that. Agreed? Agreed or disagreed? Agreed. My dear friends, this is current assets upon current liabilities. Keep one thing in mind. If numerator increases and denominator is unchanged, the ratio will increase. The ratio will increase. Let us say that your earlier ratio was 4 upon 2 and now it becomes, let us say, 5 upon 2. Here it was 2, here it will become 2.5. So what has happened? The ratio has increased. Please understand this particular concept. For questions on this, there are certain questions on this particular concept. Those questions we will do in our MCQ session. Right now, we are understanding only the formulae. So I am holding myself up to there where I am not doing too much of current ratio. Questions आएंगे अपन solve करेंगे. We will do from study materials and exam support package. Not to worry about it. Those also videos are going to be made available. But right now, just understand the concept. What is the concept? That current ratio is current assets upon current liabilities. Numerator अगर increase हुआ तो ratio increase होएगा. Denominator अगर increase होएगा तो ratio decrease होएगा. Vice versa. Rule of thumb is 2:1. My dear friends, please understand, or rather revise with me, that current assets were broken down into two categories: quick assets and non-quick assets. Now the business says that okay, chalo, you have enough current assets to pay off the current liabilities, but the management is worried. Why are they worried? They're like, अरे boss, current assets ज्यादा क्यों है पता है? क्योंकि अपना stock, that is inventory ज्यादा है. That is stock, that is inventory ज्यादा है. तो आज के पीरियड में ऐसा लगेगा कि वाओ करंट एसेट ज्यादा है, लेकिन हमें डर है, हमें खौफ है इस बात का कि अगर ये इन्वेंट्री बिकी नहीं तो हम करेंगे क्या, हमारे पैसे अटक जाएंगे. तो आप आपके करंट एसेट्स के अंदर से आपके इन्वेंट्री को माइनस करो, आपके प्रीपेड एक्सपेंसेस को माइनस करो और हमें बोलो आपके करंट एसेट्स में एक्चुअली कैश जनरेट करने की कितनी जान है. ये बन जाएंगे आपके क्विक एसेट्स. इसको सिंपल लैंग्वेज में बोलते हैं एक्चुअल कैश जनरेटिंग एबिलिटी of your current assets. What is this? This is the actual cash generating ability of your current assets. Now, do you have enough quick assets to do what? To repay the current liabilities. To do what? To repay the current liabilities. So the question is, for 1 rupee of current liabilities, how much quick assets do I have? The rule of thumb for this ratio is 1:1. What is it? 1:1. So my dear friends, please understand, when I say quick assets upon current liabilities and I was to say that inventory is increasing. What is increasing? Inventory is increasing and cash is decreasing. Your this ratio is impacted because cash is a quick asset. Quick assets are going down and non quick assets are going up. इसकी वजह से क्या होता है? रेशो नीचे जाता है. इसकी वजह से रेशो इज नॉट इम्पैक्टेड. व्हाट इज द थिंग अबाउट द रेशो? इट इज नॉट इम्पैक्टेड. सो इन्वेंट्री का बढ़ना अपने आप में कोई नुकसान नहीं, लेकिन अगर कैश घटा तो नुकसान है. अब समझ के चलो, अब समझ के चलो, इन्वेंट्री जो इंक्रीज होती है वो दो रीजन से होगी. या तो आपने उसे कैश परचेस किया होगा, या तो आपने उसे क्या किया होगा. Now pay attention to this one. Suppose it's a cash purchase. Your journal entry will be purchases account debit, and if it's a credit purchase, your journal entry will be to sundry creditors, or you can use the word accounts payable. Friends, over here, a quick asset has reduced. Therefore, therefore, your ratio, which asks you the question, do you have enough cash generating ability to pay off current liabilities, which is known as your quick ratio, which is known as your liquid ratio, which is also known as your acid test ratio, will fall. Over here, your current liabilities will increase. So in both the scenarios, your quick ratio is falling. What is happening to your quick ratio in both the scenarios? It is falling. When the inventory is increasing because of a cash purchase or because of a credit purchase, your quick ratio is falling, because in the first case, your quick assets are reducing, and in the second case, your current liabilities are increasing. I hope you understand this particular aspect. Yes or no? Please tell me that. Yes. Yes. Let's move on to the next part. Let's move on to the next part. Now focus and pay attention to the next part. My dear friends, यहाँ तक भी ठीक था. My dear friends, यहाँ तक भी ठीक था. अब समझने की कोशिश करो. Current assets में क्या क्या आया? Make a list. Come on, repeat after me. Current assets comprise of what? Cash, bank balance, accounts receivable, bills receivable, marketable securities, short-term investments, inventory, and prepaid expenses. These are the most general and obvious ones that you all are going to get. Now, my dear friends, inventory and prepaid expenses, what are they? They are non-quick assets. What about the balance? They are your quick assets. Now, within the quick assets, I want to know my absolute cash assets. I want to know my absolute cash assets. Now, please understand, I need to know what? My absolute cash assets. What is absolute cash asset? Absolute cash asset means button दबाओ पैसा मिल गया. Absolute cash asset means what? Button दबाओ पैसा मिल गया. Which is nothing but your cash balance, which is nothing but your bank balance, which is nothing but your short term investments, and which are nothing but your marketable securities. Here we do not consider accounts receivable. Here we do not consider bills receivable. Why? This is our absolute cash. This is outright cash. This is rokda. What is this? This is outright rokda. This is outright rokda. This is outright money as far as we are concerned. Yes or no? Yes. Therefore, please understand, does your company have that much absolute cash that it can pay off its current liabilities? What am I trying to say? I am trying to say, is your cash plus bank plus marketable securities plus short term investments good enough to meet your current liabilities? Can you pay off your current liabilities by using these four? If the answer is yes, then you have that kind of liquidity. This is referred to as liquid ratio. What is this referred to as? This is referred to as liquid ratio. Then finally we ask ourselves the question, what is the working capital of the company? Working capital is basically current assets minus current liabilities. Now what we are going to do is we are going to jump into Baker. We are going to jump into our Baker notes. We are referring to the publication Baker for this part. And now we will start putting tick marks on all the ratios that we have learned. Current ratio. What is current ratio? It is a measure of how much current asset is available to pay current liabilities. What is current ratio given by? Current assets upon current liabilities. Agreed or disagreed? Yes. Agreed. Let's go to the next one. Just hold on. Next one. What is next? Now is the quick ratio. Quick ratio is also known as what? Acid test ratio. It is also known as liquid ratio. See, it is also known as acid test ratio. It is similar to the current ratio, but it includes excludes inventory and includes only more liquid current assets. More liquid matlab kya? They are going to be converted into cash within the next 12 months. So in quick ratio, what is excluded? What is excluded? Inventory is excluded and prepaid expenses are excluded. What was this? Quick ratio. What is the formula? Quick assets upon current liabilities. Next formula. Absolute cash ratio. Absolute cash ratio. In this, what do we not include? What is not included? Sir, in this, inventory is not included. Sir, in this, prepaid expenses are not included. Sir, in this, accounts receivable is not included. Sir, in this, bills receivable is not included. So, what will we include? Sir, we will include cash. So, I am writing plus. What will we include? Cash. Sir, we will include bank balance. Sir, we will include short term investment and we will include marketable securities. ये एक्चुअल एट एनी पॉइंट इन टाइम आपका एक्चुअल लिक्विडिटी ऑफ द कंपनी है, इतना रोकड़ा आपके पास पड़ा हुआ है. आर यू अंडरस्टैंडिंग? डज दिस हैव द एबिलिटी टू रीपे द करंट लायबिलिटीज, यू आर आस्किंग. so so this ratio, which is a derivative, so see what happened. There was a current ratio, then that became a quick ratio, then now that has become a cash ratio. So what did we do? We started boiling down current assets. Current assets, if we started from a higher amount, we are slowly but steadily boiling down to a particular amount of current assets that we are checking ki can we use this to pay off what? To pay off our current liabilities. Do you understand this particular aspect? Yes or no? Please tell me that. So what did we boil down to? We boiled down to the cash ratio. Next ratio, very interesting ratio, operating cash flow ratio. Now, for all those of us who have done the cash flow statement, understand the cash flow statement, we know that for any business, for any business, there are three forms of cash flows. There are three sources of cash inflow. Of what? Of cash inflow. The first source is operations. What is the first source? Operations. So this is as good as saying that this is sale of cars by BMW. What is BMW? BMW is a car company. Agreed or disagreed? BMW is a car company. How does BMW keep itself alive? How does BMW keep its operations going? How does BMW function? By selling cars. It's its operations. Similarly, you have some sources known as financing activities. What are financing activities? Guys, they are raising of capital. What is this? This is raising of capital either through equity or through debt. This is a cash inflow. When you raise capital, you get money, don't you? That is your financing activity. And the next is your investing activity. Now, what is your investing activity? Investing activity generally involves inflows and outflows. The inflow comes from sale of assets and the outflow occurs due to purchase of asset. Due to what? Purchase of asset. See, today a company can stand up and say that I have made a loss of 500 crores. A gain of 500 crores. But that gain comes because I made a profit of 490 crores by selling my land, which is there in an industrial area. What does the company do? Sir, we manufacture potato chips. Are you are a potato chips manufacturer. You are Ruffle Lays. You are Lays. You are selling land. Are that is a one-off transaction. Why is Ruffle Lays there in the world today? To sell land or sell potato chips? Potato chips. I am Nescafe today. I made a fantastic profit on derivatives trading. Why is Nescafe there today? To sell coffee. Nestle has a brand called Nescafe. Nestle made a huge profit on their financial investments. Good for Nestle, but does that change the fact that Nestle is here to make Maggie? Nestle is here to make Milky Bar chocolates. Nestle is here to make Kit Kat chocolates. And Nestle is here to make apna Nescafe coffee. So you make some investment inflows, outflows, good for you. But they do not define the real value of your business. What is the true value of any business? Operations. This is going to be a regular source. This is not going to be regular. And this is not going to be regular. Every time you need a loan or you need money, do you go and take a loan? You hedge your funds. I understand. I appreciate that. Maybe you borrow money from somewhere against a guarantee that you will repay it after some time. This is very normal. But are you living your entire life in a way that चलो यार पिछले 5 साल आईसीआईसीआई के लोन पे कट गए, अच्छे कटे, मुंबई छोड़नी पड़ी, आईसीआईसीआई बैंक को डुबा दिया, अब हम आ गए हैं फॉर एग्जांपल चेन्नई में, चलो अब यहाँ पे एचडीएफसी बैंक को डुबा दिया. 10 years nicely lived in Chennai, and you are saying चलो काठमांडू में जाते. Do you live your life like that? You need money regularly coming in. And where does that money come in from? Operations. In these three sources that you can see on the screen in front of you, that is operations, finance, and investing. The true value of a business is because of its operations. I buy a company, I invest in a company because I see some value in its operations. People always say that Ratan Tata made the right decisions. Ratan Tata purchased the right kind of companies when he came to power in the Tata Group in 1993. Ratan Tata purchased Jaguar Range Rover because he saw potential in their intellectual assets. Ratan Tata purchased Tetley Tea Company. Tata Tea purchased Tetley Tea Company. Tata purchased Chorus Steel. You know what was the speciality of Ratan Tata? He bought businesses larger than his own business. There was a hoarding, or there was a sign on the luggage carrier belt of one of these airports in honor of Ratan Tata's death. A doctor was asking how much time can you buy a BMW? He said in 3 months. An engineer was asked, he said within 1 year. Somebody else was asked, he said 2 years. Ratan Tata was asked, he said come se come 5 to 7 years. They said why Mr. Tata? He said BMW is a big company. Everybody else was talking about buying a BMW car. The late Mr. Tata was talking about buying the BMW company itself. So Ratan Tata was a great businessman, philanthropist, great human being. Okay, he was notorious. Notorious matlab dangerous. Dangerous with respect to buying out companies. He sees potential in a company. He doesn't care whether it is a big company or a small company compared to him. He goes to the lion's den and hunts the lion down. That's what made Ratan Tata a great businessman. Acquisition of companies that were much larger than the core companies for which they were being absorbed. Chorus was far bigger than Tata Steel. Jaguar Range Rover was far bigger than Tata Motors. Tetley Tea Company was far larger than Tata Tea at that particular point in time. But always remember one thing, when a lion hunts a wolf, the lion does not grow stronger. But when a wolf hunts a lion, the wolf grows stronger. That was the philosophy by which Mr. Tata ran his business. And how did he look at a company on the basis of its operations? Does the company have the intellectual assets and the current business to keep itself going? That is called operational cash flow. Do you understand this particular concept? Operating cash flow ratio talks about ki whether your company, operating cash flow ratio says whether your company has enough cash flow. Now the question here is, does your company, I'll just write this in better handwriting. Yeah, it's a very bad handwriting. So the question is, does your company have enough ऑपरेटिंग कैश फ्लो? धंधे में जान है क्या? To repay current liabilities. The answer for this always should be, must be yes. Sir, why? Sir, what if I have made an investment out of my operations? You idiot. You are investing the money that you have to use in business. You have a better place to invest your money, then why the hell are you doing business? Get lost. Keep your money invested there. Sit at home and read the newspaper and abuse politicians. Why are you doing business? Why are you doing business? Are bloody, you are doing business because you can give a higher return on investment than those sources, na? Therefore, don't come to me and say, Are, I'm clucking because I have got money to keep in investments. No. You have to keep your money in operations. Once you have lubricated your operations, you have got enough money in operations. Now पैसा पड़े पड़े सड़ रहा है. You have more than you can spend. पैसे पे जंग लग गया अभी. तब क्या करने का वो पैसे का? शॉर्ट टर्म इन्वेस्टमेंट मार्केटेबल सिक्योरिटीज. तब तक क्या करते रहने का? invest in business only. Understand? Are you understanding what I'm trying to say? You will go beyond when you know that your business does not have the ability to give you more earnings. That's called expansion. That's called diversification. I beg your pardon. That's called diversification. Until then, what do? You keep on doing expansion. So obviously, when I ask you the question, do I have enough operating cash flows to repay my current liabilities? I'm asking the question for 1 rupee of current liabilities, how much operating cash flow do I have? What is the question that I'm asking you? For each dollar one of current liabilities, how much operating cash flow, how much operating cash flow do I have? This is a very important aspect. This is a very, very important aspect. Do you understand what I'm trying to say? Yes or no? Please tell me that. Yes. So, what ratio did you learn now? You learned the operating cash flow ratio. The next ratio that you are going to learn, the next ratio that you are going to learn is the net working capital ratio. That is nothing but, that is now, net working capital ratio and net working capital are two different things. See, first of all, see over here, you will, okay, now they have directly gone into effect of changes. I'm not interested in that in this discussion because that is MCQ discussion. This is a concept lecture. What is this? This is a concept lecture. For MCQs, we will do na full wholesale mein we will do MCQs. Right now, understand that this is a concept lecture. They are talking about net working capital. They have used the word ratio. Always remember, net working capital is equal to current assets minus current liabilities upon total assets. Whereas net working capital in itself is going to always be current assets minus current liabilities. So this is net working capital ratio and this is net working capital. Now here there is one more important ratio that you need to probably look at. It's an important one. I call this as the basic defense interval ratio. What is this? Basic defense interval ratio. Please understand. What does basic defense interval ask you? It asks you, number one, what is the cost of running your business? It asks you the question, what is the cost of running your business? This is the first question that you ask yourself over here. So, sir, here what we'll do now, we will take all our operating expenses and we will take a total of that. Our total operating expenses. This is the cost of running my business. Sir, I will divide this by 365. What will happen? This will ask what is the daily cost? What is the per day or the daily cost of running your business? What is this? This is the daily cost of running your business. Do you agree with my statement?
Yes.
Now I will keep this in my denominator. I will keep this in my denominator and I will ask myself the following questions. Do I have enough current assets? I mean, the kind of current assets that I have, or the kind of cash that I have, or the kind of cash that I have. Please understand. Here I will ask myself, what kind of cash do I have? Now, operating expenses. Suppose if I have cash with me 10 lakh rupees. My operating expenses of running the business are, let us say, 1 crore 20 lakh rupees for the whole year. How much? 1 crore 20 lakh rupees for the whole year. I divide this by 365. Kindly divide this 1 crore 20 lakhs divided by 365. What is your answer? Your answer is 32,876. What is your answer? 32,876. I have got 10 lakh cash or liquid assets in my hand. So basically I am saying that एक दिन का खर्चा 32,876 है, मेरे हाथ में 10 लाख रुपया है, तो how many days can I carry on my business? So 10 lakhs divided by 32 whatever. So it shows that without getting any more additional business for 30 days my company can survive. So if I want my company to expand, I want my company to stay alive, I have to get sales within what period of time? 30 days. नहीं तो 31st डे का खर्चा देने के लिए मेरे पास में पैसा नहीं है. A healthy ratio in this is generally considered to be 3 months. That is, you should have how much money for survival? 90 days worth of money of company survival has to be there with you. If you don't have it, then there is something wrong in the way you're managing your cash. What was this, my dear friends? We completed our liquidity ratios. What ratios have we completed here? We have completed liquidity ratios. We are quickly going to take into consideration these 6 examples so that we have got a little bit of question answer flavor over here. At the end of year 1, William Corporation has a current ratio of 3, a quick ratio of 1, and a cash ratio of 0.5. Whenever somebody says this to me, na, I simply laugh in my head. I say that you are trying to confuse. What are you saying? We have got a current ratio of how much? 3. My head says like this. Current ratio is 3. So please say current assets upon current liabilities is 3 upon 1. Therefore say that current assets are 3 lakhs and current liability is how much? 1 lakh. Now I will keep my current liability at 1 lakh only. Now they are saying that my quick ratio is 1. What is my quick ratio? 1. So now let us focus on quick ratio 1. They are saying quick ratio is equal to 1. So quick assets upon current liabilities is how much? 1 upon 1. Therefore, if I say that my current liabilities taking Q from this same example are 1 lakh. ऐसा नहीं है ना कि रेशो के साथ liabilities बदलेगा. Obviously not. You're looking at the same company. So quick assets कितने हो गए आपके? Therefore, immediate basis पे my brain told me that my non-quick assets are 2 lakhs. So it's quite possible that 2 lakhs are invested in what? In inventory and prepaid expenses by the company. Third, they are saying cash ratio. Third, what are they saying? Cash ratio. My dear friends, cash ratio is equal to what? It is cash balance plus bank balance plus short-term investments plus marketable securities. So why are you using so many different words? Because this is how the chartered accountants do it, and that is how you are supposed to do it, irrespective of whether you are becoming a USCM, right? Upon what? Current liabilities is equal to how much? 0.5. So if I was to say that my current liabilities are 1 lakh, can I say that all these boys put together is how much? Is equal to 50,000. I should have this clarity when I'm approaching a particular question. Have the facts been? Have you understood the first statement?
Yes.
Sir, we have collected 15,000 of cash, collected 15,000 of account receivable. They are asking us whether each transaction will increase, decrease, or have no effect on each of the following ratios. All right, my dear students, let us begin. My first transaction is collected money from my debtors. Collected money from my debtors. Debit, what comes in, sir? Cash account debit. Sir, debtor अभी debtor नहीं रहा, so I will say accounts receivable account. How much? Sir, 1,50,000. How much, sir? Sir, 1,50,000. My dear friends, please understand. My current assets, my quick assets, my cash assets. My current assets were 3 lakhs. Agreed or disagreed? My quick assets were 1 lakh. Agreed or disagreed? And my cash assets were 50,000. Sir, your cash has increased by. Sir, first of all, please understand that your current assets have increased by 1.5 lakhs and they have decreased also by 1.5 lakhs. Because accounts receivable is a current asset. Sir, so can I say that current asset position is unchanged? Your current assets come back to 3 lakhs. एंड करंट लाइबिलिटीज तो अपने 1 लाख पे खड़े थे ही ना. अग्रीड और डिसअग्रीड? करंट लाइबिलिटीज अपने 1 लाख पे खड़े थे ही ना. यस और नो? प्लीज टेल मी दैट. माय डियर फ्रेंड्स, क्विक एसेट्स आर इक्वल टू व्हाट? क्विक एसेट्स आर इक्वल टू एवरीथिंग एक्सेप्ट फॉर योर इन्वेंट्री एंड प्रीपेड. सर, मेरा 1.5 लाख से ना कैश इंक्रीज हो रहा है. मेरा 1.5 लाख से क्या हो रहा है? कैश इंक्रीज हो रहा है. और सर, मेरा 1.5 लाख से ना अकाउंट्स रिसीवेबल डिक्रीज हो रहा है. Sir, my quick asset position is unchanged at 1 lakh. Is unchanged at 1 lakh. Sir, so my current ratio is unchanged. My current ratio is equal to current assets upon current liabilities is unchanged. Sir, my quick ratio, which is equal to quick assets upon current liabilities, is also unchanged. But sir, look at cash ratio. ये मेरे cash assets थे. They have increased by 1.5 lakhs and my current liabilities are not moving. Therefore, now can I say that my cash assets, that my what? That my cash assets have now become earlier 50,000 plus 1,50,000 upon 1 lakh, and now my old ratio, which was 0.5, the new one has now become 2.00. Agreed or disagreed? Yes or no? Please tell me that. Agreed or disagreed? Agreed. 100% we agree to this statement. Therefore, now look at what they are saying. No effect on current ratio or quick ratio because an increase blah 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 blah. The cash ratio increases because the numerator increases by whatever 15,000, 1 lakh 50,000, whatever. Denominator is unaffected. They have taken 15,000. How much we have taken? 1,50,000. 1,50,000. Doesn't matter. It's the same thing. सर 15,000 से बड़ा तो ऐसा होगा 1.5 लाख से. बेटा तू 15,000 ऐड कर या तू 1.5 लाख ऐड कर और बोल कि उतना तूने कलेक्शन किया, तेरा आंसर दोनों जगह पे सेम ही रहने वाला है. पेड 1 लाख कैश फॉर बिल्डिंग, ये गजब का एग्जाम्पल है. ये गजब का एग्जाम्पल है. प्लीज अंडरस्टैंड. यू पेड कैश फॉर व्हाट? बिल्डिंग. प्लीज फोकस. व्हाट हैव यू डन? Paid cash for building. This is a crazy example because understand, cash is a current asset and building is a non-current asset. The journal entry that I pass over here is going to be building account debit to cash. Please understand, everywhere my cash balance has gone down. So in my current ratio also, my current assets has gone down. In my quick ratio, my quick assets has gone down. And in my cash ratio, what has happened? My cash has gone down. So all three ratios will be reduced because of this particular transaction. Do I make myself clear? Yes. So paid 1 lakh for cash of building, that's your answer. Let's go to the next one. Purchased inventory on account. Inventory on account मतलब उधारी पे सामान खरीदा. क्या किया? उधारी पे सामान किया. Please focus on the statement. It is a credit purchase of inventory. What is this? This is a credit purchase of inventory. What am I looking at? I am looking at a credit purchase of inventory. What is the journal entry for credit purchase of inventory? Sir, debit what comes in? Sir, purchase account debit. Sir, purchase account debit में यहाँ पे आप ब्रैकेट में लिखो इन्वेंट्री. ओके सर, लिख दिया. सर, टू अकाउंट्स पेएबल. टू व्हाट? Accounts payable account. Sir, here what has happened is my inventory has increased and that is equal to my current liabilities increase. Sir, please understand, when I talk about current ratio, it is equal to current assets upon current liabilities. Sir, please understand the following statement. Sir, please understand, now how much is the transaction worth? 50,000. What is the transaction worth? 50,000. Sir, please understand the following statement. Sir, my current assets, old position of current assets was 3 lakhs and old position of current liabilities was how much? 1 lakh. Now, my dear friends, you are passing an entry for how much? 50,000. For how much? 50,000. So, wait, let me write the entry properly so that there is a transparent, matlab ekdam mast understanding has to be there. So, now focus over here. So, what is this? 50,000. Agreed or disagreed? 50,000. This is a very jaundice color. Now next, let's focus. Let's focus on the next. Exam like color. I saw this one small baby. They were suffering from jaundice. The eyes of that baby were of this color. My God, it scared the living daylights out of me. And now when I do like this, now I say it's like Australia cricket team or jaundice. So when I see Australia cricket team playing, now like बच्चे लोग का jaundice आ गया ground. कसम खुदा की. like Allah, बच्चे लोग का jaundice is on the ground. Understand what I'm trying to say? Okay, now pay attention. Anyway, so now this is 50,000. Now see what is happening over here. Okay, now this is the scenario. Now see over here. What has happened is your inventory increase is equal to your current liability increase. Okay, now let's talk about your current ratio. Your old position of current assets was how much? 3 lakhs, and of current liabilities was how much? 1 lakh. Now the new position is how much? Sir, 3 lakh and 50,000. 3 lakh and how much? 50,000. And यहाँ पे it is 1 lakh and 50,000. यहाँ पे how much? 1 lakh and 50,000. Here the ratio was 3. Now here it is going to be 3 lakh 50,000 divided by 1 lakh 50,000. What is your answer? 2. Your answer is 2.33. So always keep one thing in mind. Always keep one thing in mind. When the current ratio is greater than 1 and current asset increase is equal to current liability increase, in such a scenario, the current ratio will fall. What will happen? The current ratio will fall. Do you understand? This is your cheat code for your CMA exams. This is your cheat code for your CMA exams. I hope this is clear for you. Yes. What is this? This is your cheat code for your CMA exams. I hope this is very, very clear for you. Go in for the next one. Go in for the next one. Now here, I am saying in the next one that inventory is increasing and current liability is increasing. Friends, for my quick ratio, for my what ratio? For my quick ratio, my old quick assets were 1 lakh and my old current liabilities were how much? They were 1 lakh. But friends, please understand, inventory is a non-quick asset. So in the new case also, my quick assets will continue to be 1 lakh, but my current liabilities now have become 1 lakh 50,000. My old ratio was 1. My new ratio will become 100 divided by 150, which is equal to 0.67. So what has happened to this ratio? Sir, it has reduced. Let's look at the next ratio. The next ratio is the cash ratio. In the cash ratio, I'm looking at absolute cash divided by current liabilities. My dear friends, my numerator is unaffected, but my denominator is going up. So my absolute cash was 50,000. It was upon 1 lakh. So my old ratio was 0.5. Now my new ratio will become 50,000 upon 1 lakh 50,000. It will become 0.3. So obviously there is going to be a fall. Sir, how was this? Array, we calculated na कैश एंड करंट लाइबिलिटी, तो उसमें अपन ने कैश को 50, इसको ये कर दिया था, तो अभी ये 50 का 50 ही रहेगा, लेकिन ये बढ़ जाएगा ना दोस्त, 1 लाख का करंट लाइबिलिटी में 50,000 रुपया क्या हो जाएगा, ऐड हो जाएगा. आई होप यू अंडरस्टैंड दैट कॉन्सेप्ट. सो ऑल थ्री रेशियोज, व्हाट इज हैपनिंग टू देम? All three ratios are going to reduce. All the three ratios decrease. Understood? Point number 3. Point number 4. You sold inventory with a cost of 30,000 for a cash of 45,000. ये जबरदस्त है, ये जबरदस्त है. Now please understand the following statement. What is the cost of inventory? And selling price in cash. It is sold in cash. How much? Please focus on the journal entry. Debit what comes in? Sir, cash account debit. How much? 45,000. Sir, credit what goes out? Sir, to sales. Sale gaya hai. I am writing over here inventory. How much? 30,000. And I am writing over here profit and loss. This is nothing but your gain. My dear friends, please understand one thing. My current assets have fallen by how much? By 30,000. But my current assets have increased by how much? 45,000. So can I say that net my current assets have increased by 15,000? And surprisingly, it is cash that has increased. So my dear friends, please answer my question. If I was to look at current ratio, which is current assets upon current liabilities, my old standing was how much? Was 3 lakhs upon how much? 1 lakh. My new standing is going to be 3 lakh 15,000 upon 1 lakh. Are sir, how 3 lakh 15,000? Are Raja, in 3 lakhs, you add 45. हाँ correct correct, cash आया. हाँ sir, 50 या 30 inventory क्या और अरे बाबा, what is the difference here? The difference is 15,000. No, just straight away peacefully add 15,000. Are you understanding what I'm trying to say? Yes. So the old ratio was 3, the new ratio is going to become 3.15. Sir, over here, in the case of my quick ratio, it was quick assets upon current liabilities. Sir, it was 1 lakh upon 1 lakh, and it's a cash sale. Sir, now it has become 1 lakh 15,000 upon 1 lakh. Sir, here it was 1 is to 1, here it is 1.15 is to 1. Sir, in the case of my cash ratio, sir, my old ratio was 50,000 upon 1 lakh. So now the new one will become 65,000 upon 1 lakh. Sir, my old ratio was 0.5. My new ratio is going to become 0.65. Sir, all three ratios are going to increase. Sir, what is going to happen? All three ratios are going to increase. Sold inventory with a cost of 30,000 for 45,000 on account. This was a cash sale. What was this? This was a cash sale. What is this? This is a credit sale. What is this? This is a credit sale. Now let us focus on the credit sale. Journal entry for credit sale. Debit what comes in? Sir, account receivable account debit to, sir, sale. Sir, this is nothing but my inventory going out for how much? For 30,000, coming in for 45,000, and sir, 15,000 is what? It is my gain. I will credit it to P&L. Sir, now let us pay keen attention to this particular statement here. Sir, in my current assets, there is a net increase by 15,000. Sir, in my quick assets, there is a net increase by 15,000. And sir, in my cash, there is no impact. Sir, in my cash, there is no impact. Sir, my current assets will now become 3 lakh 15,000 upon 1 lakh. Sir, so this will become 3.15. Sir, this will become 1 lakh 15,000 upon 1 lakh. So this will become 1.15 and this will stay 0.5. So my current ratio and my quick ratio increases, but my cash ratio does not. So current ratio increases, blah blah blah. The quick ratio and cash ratio both increase. There is no change to the this. Does not the change in inventory. Sorry, this one. Sorry, I'm reading the wrong one. So the current ratio increases, there is no change. The quick ratio increases, there is no effect on the cash ratio. No effect on cash ratio, we agreed. Quick ratio increases, we agreed. Current ratio increases, we agreed. We agreed to all three statements. And the working, of course, of all the three statements we have made over here. Agreed or disagreed? Right? Now this was which one? Fifth one, right? I'll put a tick mark. Pay paid accrued payroll from year one amount of 20,000. Now look at the statement. It's a good statement. My dear friends, first understand the meaning of the word accrued. Accrued means outstanding. Accrued means outstanding. Outstanding is a liability. Bility. My kindergarten teacher used to hit me in the head when I used to write. So that impaired my ability to form spellings. And then after that, I always believed that my handwriting is so beautiful that sometimes in its beauty I am lost. I can't even read it. So that's the problem with my handwriting. Right? So I assure you one thing. CA, CMA, to of course by grace of God you will become. But a free degree you will get is you will become a pharmacist also. You will be able to read doctor's handwriting, because of this. Anyway, so accrued means outstanding, means a liability. Now what have you done? You have paid your accrued. You have done what? You have paid your liability. What have you done? You have paid your liability. This is a very, very interesting concept. This is a very, very interesting concept. I need you to pay attention to this very carefully. सर जर्नल एंट्री मारो जो क्रेडिट था वो डेबिट हो जाएगा accrued liability my dear friends accrued liability had what balance sir it had a credit balance but now sir I paid it the moment I paid it the credit balance will get what so the credit balance will get reversed मतलब वो क्या बन जाएगा सर डेबिट बन जाएगा agreed to my statement so now over here also I want you to have this is a trivia for people who like accounting always remember that a liability, an expense is a nominal account, but an outstanding expense is a personal account. Outstanding expense is a personal account, but expense is a nominal account. There are no nominal accounts that go to the balance sheet. In the balance sheet, you only have personal and real accounts. Nominal accounts exist only to the extent of trading and P&L account, because the outstanding expense represents the individual to whom the payment has to be made and not the expense per se. That's the concept behind this. So debit the receiver बोलते हैं उस तरीके से this will become what accrued liability account debit to और आपने क्या कर दिया you have paid it you have done what paid this so you have paid it means आपका पैसा बाहर गया you have paid it means what happened your money has gone out agreed where had I written so your cash has gone out I will say what was the amount of that liability 20,000 amount doesn't matter we can take it as 80,000 also that doesn't really change the impact on the ratios now this is what has happened so what has happened here essentially is that current liability has decreased and current asset has increased it is a very good thing on the part of the writers what have they done they took current asset increased current liability increased now they have taken current asset decreased current liability decreased now let us go to our current ratio our current ratio old. Our current ratio old. Welcome back to Australian Jaundice team. Now, our old current assets were how much? 3 lakhs. Now you paid 20,000. So now they will become how much? Sir, 2 lakh 80,000. Your current liabilities were how much? 1 lakh. Now they will become how much? 80,000. So here your ratio was 3. Here your ratio will be how much? 2 lakh 80,000. How much? 3.5. Sir, what has happened to my current ratio? It has increased. Sir, immediately I am going to make a statement. Sir, when the current ratio is greater than 1 and current liability decrease is equal to current asset decrease, sir, in this scenario, my current ratio will increase. Sir, this is a cheat code for US CMA. This is a US CMA cheat code. Are you understanding? Yes or no, please tell me that. This is a cheat code for US CMA, very important statement. Sir, now let us look at our what ratio? Sir, we will look at our quick ratio now. Sir, in quick ratio, my old quick assets were 1 lakh and my current liabilities were also how much? 1 lakh. Now I look at the new ones. Sir, 15,000 भर दिया. So ये कितना बन जाएगा? 85,000. और ये कितना बन जाएगा? 85,000. Sir, unchanged. Sir, what? Unchanged. Therefore, please understand, when the quick ratio is equal to 1 and current liability fall is equal to quick asset fall, the ratio is unchanged because it is 1. Now look at your cash ratio. Now look at your cash ratio. What happens in your cash ratio? In your cash ratio, your old position was 50,000, whereas your liabilities, this was your cash, your current liabilities were how much? 1 lakh. Now, in the case of the new one, the cash will become how much it was? 20,000. So this will become 80. Huh? Sorry, yeah. So 80 means the same thing. Means also it is not changed yet. Divide and see 1 is to 1. You divide 85 by 85 or 80 by 80. Matlab, it's the same thing here. You hold the ear by the right side or the left side. Now translate into Hindi. कान को यहाँ से पकड़ो या वहाँ से पकड़ो. असर तो साला वही है. Right? So don't get very nervous about it. So ये कितना है? 30,000. और ये कितना हो जाएगा? 80,000. यहाँ पे रेशो क्या था? 0.5. यहाँ पे रेशो क्या होगा? 3 divided by 8. What is the answer? 0.375. So you can see that the cash ratio has decreased. What has happened to the current ratio? It has increased. The quick ratio is unchanged and the cash ratio has decreased. So current unchanged. The current ratio increases. So here you are, current ratio increases. What about the quick ratio? Does not change and the cash ratio decreases. With this, we have finished the discussion of this particular set of ratios. And with this, I can happily say that my liquidity ratios are completed. What are completed? Liquidity ratios are completed. In the next video that we are going to have, I believe, just a second, so that I have a firm this to tell you. I would like to believe that the next set that we are going to encounter is going to be leverage ratios. What we are going to do in the next video is leverage ratios. So I'm going to stop this here, go to the next one with leverages. All right. Thank you so much. I hope everybody has understood. Yes? Yes. Fair enough.